Hello, everyone. I'm Matt Clark, research analyst with Money and Markets, and with me, as he is each and every week, from wherever Vista he may be scouting from. It could be Peru, it could be Texas, it could be Montana, for all I know. I really don't know, and he likes to keep it that way. But it is Greens and Fortunes co-editor Charles Sizemore, and we are here with another edition of Investing with Charles. Charles, thanks for joining, and I actually know where you are this week, but I won't reveal your location for fear of anyone in a post office looking for your wanted poster.
I'm in hiding after all.
Exactly, and I kid. Really, there's one big topic to talk about here. We touched on this last week, and that was the impact of Russia and Ukraine and what it will have on your investment. Not yours, but I mean everyone's investment on the market. Mine
personally.
Yours personally, as well as anyone else who's investing. And at that point in time, you had said, the main thing is it going to have an impact? And the answer is yes, but it's important for investors to not take their eye off the ball, and that ball being the Fed. What the Fed is going to do in relation to inflation, to tapering, quantitative easing, any of those tools at their disposal that they can use to kind of help curb inflation and obviously reduce their balance sheet of all the bonds that they bought up over the last year and a half. And that's going to have a much bigger impact on the market than Russia, Ukraine. However, and I'm not saying that you're wrong, because I think you're right. But as we've seen over just in this week, we have entered a correction territory with the S&P 500 as it has come off about 10.7% off of its high from January 3rd. And this is mainly, I don't think mainly, but I think a lot of this is due in large part to recent developments in Ukraine. And I guess to provide a history lesson or to provide a news lesson or current events lesson for everyone who may not know, Russian President Vladimir Putin recognized two breakaway republics in Ukraine on Monday. He sent troops in as peacekeepers, and this has sent the entire geopolitical world on fire. Sanctions have been imposed already, at least a tranche of sanctions from the EU, from the British, as well as from the United States. They're very targeted, so these sanctions aren't having a massive impact on global markets because they're very targeted at specific investors, at specific abilities for Russia to withdraw capital, to draw capital from foreign markets, and targeted at banks who are specific to the Russian economy. But that said, it has put us into correction territory. So I don't want to ask if you're revising your stance, because I agree with you. I think the bigger thing here is to not keep your eye off the ball and remember the Fed still has some work to do, and this is just causing another wrench in the Fed's movement to ease inflation. So I guess give me your take here, and I have a few charts I want to show in relation to some things in the past, and we'll get to that here in just a second. But first off, I kind of want to get your take on how things have progressed thus far, and especially related to the market.
Sure. Well, so if you flipped on the TV or looked at a news site or anything, it's all Russia all the time. That's the only thing in the news right now. So you do have to at least address it, right? I'm really sticking by what I said before. This is really, it's not that it doesn't matter. I mean, sure, this could potentially snowball into something much more significant. It could snowball into a real hot war that involves more than just the Russian army and pockets of the Ukrainian army. It could turn into a more regional conflict. Who knows? If things get crazy, nuclear missiles could fly. I don't consider that a very realistic possibility, but you got to put it out there. That said, these things happen. This idea that we've been living in the Pax Americana for the last 30 years or whatnot isn't really. It's never really been true. There's always been wars somewhere. There's always a hotspot somewhere in the world. It's been a while since we've had one in Europe. You have to go back to the Clinton administration and go back to the Balkan Wars to really have to have a significant European war. But did the 1990s Balkan Wars have much of an impact on the market? If I remember correctly, the 90s were quite a nice time to be invested. So there are bigger issues at play here for investors. The Fed being first and foremost, earnings being right up there with it, overall valuations. These are the things that matter far more. And with that as a lead in, I believe you might have a few charts.
I actually do. And so what I did is in leading up to this discussion, I wanted to look back at different instances where there were large geopolitical issues at play, and specifically ones that involved Russia, or in the case of what I've pulled up, the Soviet Union. And so the first one I found was when the Soviets invaded Hungary. Now, to provide a little bit of context without going too deep into detail, there's a revolution in Hungary in the mid-50s, led by an individual. And at that point in time, Hungary was a Soviet republic. It was part of the Soviet Union. And in order to kind of stem that, the Soviets—
Not strictly part of the Soviet Union, but part of the Eastern Bloc anyway.
Part of the Eastern Bloc, correct. Part of the Warsaw Pact, if you will. So in order to stem the tide of that, Nikita Khrushchev at the time rolled in Soviet tanks and basically invaded Hungary. They overturned the revolution. The leader of the revolution was actually captured, arrested, and executed. So what I did is I want to look at how American markets performed during that time. Now, it's a very short period. It didn't last very long. Soviets invaded Hungary on November 4th, 1956. At that point in time, both the S&P and the Dow, as I'm looking at the chart here, were actually on an upswing. They had been relatively flat out of the summer months, not really providing much in the way of gains, but they were actually on their way to a high, which happened the day after, interestingly enough, the Soviets invaded Hungary, where they reached a 5% return, or at least the S&P reached a 5%. The Dow was at about 4.8%. Following that, the market did drop. It dropped from their highs down into negative territory in terms of returns. But by about December, that had reversed course. And then it ticked back up into 1957, down again in the early spring of 1957, and then went on a tear into the summer months of 1957, reaching a high in July of right around 10% total return. For 12 months from the time I charted from the first part of the end of October to January of 1958, both had actually returned negative. The Dow Jones was down 8.3%, and the S&P was down 11.8%. So while the Soviets invading Hungary did have a bit of a play, it was a very short-term reaction the markets had to the Soviet invasion. Now, the second thing that I looked at was I want to go a little bit further and go a little bit further to more that had more of an American interest in it. Not that Hungary being invaded didn't have an American interest, but one that had much more American at play. And that was
Hungary was considered at the time to be kind of Russia's sphere of influence. They're part of the world. So
correct. Yeah. Correct. This, however, this next event was in our backyard. This happened in October of 1962. This, of course, I'm referring to the Cuban Missile Crisis, when Cuba requested, Russia abided and put missiles, ballistic missiles, inside Cuba, putting them all in firing range of the east coast of the United States. Kennedy Khrushchev got into it about 14 days. There were spy plane flyovers. There's been a lot of movies and documentaries about this done.
It was the closest we realistically came to going to war with the Soviet Union. It was correct. It was pretty scary.
Yeah, it finally came to a head as Russian ships bringing in more supplies to Cuba were headed off by a blockade by the U.S. Navy. Instead of running the blockade, the Soviet ships were ordered to turn around, and now we have peace in our time. Kind of, but not really. So in looking at this, I also looked at the S&P and the Dow during this time. Now, the 60s were, fairly nice. The early 60s were a nice run for the market. However, when the Cuban Missile Crisis occurred in October of 62, there was a downturn. Both the S&P and the Dow did turn into negative territory. They didn't reach quite correction territory where there's a 10% off the top, but they had reached about 6 to 7% down. But again, very short-lived, very similar to the Hungary invasion in '56. The market then rebounded and into '63. There was a brief downturn in March of '63, but after that, both indices just went on a tear into late 1963. 12 months from the time of the Cuban Missile Crisis to 12 months after, the S&P returned almost 30%. Both actually almost returned 30% to the positive. So again, we see a geopolitical event that does have a minor swing on events in terms of the American markets, but it is very short-lived. Is that what we're going to see here? Again, neither Charles or I have a crystal ball, but I would ask your kind of opinion here. Is this a correction that is going to last? Is this a correction that is going to flatten out, get better, get worse? What are your thoughts?
Well, I think the takeaway is that the prevailing trend in the 50s and 60s was bull market. Those were very good years for the most part. And two very potentially disastrous geopolitical events happened, and they had very little impact on the market because that dominant trend was in place. Is that dominant trend in place today? That is a little bit more doubtful in that we are looking at a period where the Fed is starting to raise rates. We are looking at a period where earnings are extremely high and perhaps starting to ease a little bit. So I would say it really just reinforces what we've been saying all along, that this stuff is a blip on the radar and you have to look at the prevailing, the dominant themes. And right now it's still the Fed, it's still earnings.
And one thing to kind of point out here, and I don't want to throw a wrench here, and that is that the differences between the 50s and 60s and Russia and the Soviet Union's influence has changed dramatically to what it is today. Today, you have Russia as being a very predominant gas producer, as we've seen with the Nord Stream 2 pipeline. This is but on the flip side, it is also a massive potential revenue generator for not just Gazprom, but who's the state-owned entity that operates the Nord Stream 2 pipeline, but also for the Russian government. So, whereas back in the 50s and 60s, that wasn't really the case. There was not, Russia was not tapped for massive Black Sea gas that was importing to Europe or anything like that. So I just think it's important to kind of toss that out there to make sure that is in context. I don't think it changes the fact that, the ball still remains the Fed, it still remains inflation, it still remains things that are happening much closer here on the home front than what is happening in Eastern Europe. Again, a blip, yes. Something that is going to resonate long term, probably not. Now, to pivot out of that, not really pivot out of that, but to kind of capitalize on that, let's talk about ways to, I don't want to say ways to play that as an investor, because that sounds very disingenuous. But if you're an investor,
how can we profit from
how
war?
Can we make
merchants of death?
How can we profit? Where is there profit to be made here? I mean, obviously, if there is any stock that has any kind of a tie to Russia, it has faced a serious downturn. The Russia ETF has plummeted about 9% in the period of a week. Russian wealth has been paired off by almost $40 billion in that same time. So any companies with ties to Russia, with exposure to Russia, very similar to the trade wars with China we saw back early on in the Trump administration, companies that have ties to China suffered greatly because of that trade war. We're seeing the same thing here with companies that have exposure to Russia. Where is there profit to be had here?
So I would say, the most obvious is if you're looking at a scenario where Russian exports of natural gas, crude oil, potentially other commodities are curtailed, are heavily taxed, are just completely eliminated due to sanctions, the obvious play is commodities, whether it's oil and gas, just kind of raw materials, even gold. I think it makes sense. It would. Generally speaking, it makes sense to have some sort of allocation there anyway. I would say, maybe overweight that a little bit now. I think there are some really good opportunities there, kind of irrespective of what happens in Russia. But the goings on over there really kind of put gasoline on the proverbial fire. So I do think these strong trends we've already seen in raw materials and commodities, energy, I think it only strengthens them.
So, the bottom line here at the end of the day is while Russia, Ukraine, and issues in Eastern Europe are going to cause some blips on the radar here in the U.S. in terms of markets, investors probably should not panic entirely, should not just start fire sailing just because, there are bigger fish at play here when it comes to the U.S. markets and what is going to move these markets in the coming months, and that is inflation. That is, the Fed and its actions in terms of easing. And there's a lot of other things here. Trading on headlines. Charles, myself, Adam, I've told our Green Zone Fortunes readers all the time, as well as people here on YouTube, not a good idea. Don't trade on.
Let's just say I've never met a trader or investor, whatever style they like to style themselves. I've never seen anyone actively in the market who made money trading headlines.
Exactly. It rarely happens. So that's kind of
not just rarely. I've literally never seen it. So at this point, it's still a theoretical.
Exactly. So keep your eye on the ball. Understand there are bigger issues at play here. Don't get distracted by headlines. Don't get caught up by headlines right now. And be easy. Just don't. If you're in panic mode, relax. Don't. But
another takeaway on that is the takeaway is not just put your fingers in your ears and no, there's nothing bad out there. Whatever your risk management was before all this happened, you should still have that risk management in play, whether it's stop losses, whether it's position sizing, whatever you do to limit your risk in the market, you should still be doing that. You should have been doing it before, and you should still be doing it.
Maintain your system. Don't deviate from your system. So, and speaking of systems, Green Zone Fortunes, Adam, Charles, myself, our entire team provide much more analysis, much more in-depth looks at things across the market. Plus, we provide you our thoughts on stocks that are going to return 2 to 3x the market over the course of at least a 12-month period. That is all available on Green Zone Fortunes. We'll give you a link up at the top. You can find out more about that. If you have a question for myself, for Adam, for Charles, or any of our team, and you want about the broader market, maybe there's a particular stock you'd like us to look at, anything like that, email us at email address feedback@moneyandmarkets.com. Also comment down below here on YouTube. We would love to do that as well. Check out all of our stuff on YouTube. Got a lot of great stuff. Moneyandmarkets.com is your home for safe, sound, smart, simple, profitable investment information for your portfolio. Also, our proprietary Green Zone rating system, where you can check out our ratings on any number of thousands of stocks. You can have your watch list. You can track it against the rating system. It's a good jumping off point if you're looking to figure out where your next investment should go. All that is at moneyandmarkets.com. Charles, thanks so much for joining, and we'll see if things change next week and what the world brings us in terms of the market. Thanks so much for joining. For Charles Sizemore, he's co-editor of Green Zone Fortunes. I am Matt Clark, research analyst for Money and Markets. Until next time, everyone, safe trading.